Hey guys, my name is Raghu Ramprasad. I'm a mortgage agent and multifamily investor. Today we're going to talk a little bit about interest rates. What is the difference between residential and commercial interest rates? Because they're not the same. I've had a lot of investors who've encountered residential investment properties, then making transition to commercial investment properties or multifamily above 5 units. And there's a couple key fundamental differences between commercial and residential interest rate pricing. So I wanted to dig into that a bit more. So the first thing I wanted to highlight is we're talking about two very different asset classes. Okay, now in a residential asset, it's not specialized at all, meaning the buyer pool is a lot bigger. Once you start to get to 5 units and above in like multifamily or commercial in general, you start to get into very specialized assets. Your buyer pool starts to shrink, and as you get bigger and bigger and more niche, the buyer pool shrinks even more. So now you're getting into a bit of a higher risk asset versus, a traditional, normal cookie cutter residential home. Secondly, you're getting into a very different qualification bucket. In a residential mortgage, you're qualifying based off your personal income. But on a commercial mortgage, you're qualifying based off the property, which can also be riskier if you're dealing with inexperienced borrowers. You could buy a very good cash flowing asset and completely run it to the ground if you don't know what you're doing. So that being said, the pool of money between commercial and residential mortgages tend to be different. Pricing tends to be different as well. A big thing is that pricing in commercial mortgages is very much risk-based pricing. Now, depending on the asset class, the spreads tend to be within the same range. Okay, so multifamily would be within the same range, industrial might be in another range, retail may be in a different range. But where you fit in that range is really determined case by case, and it is risk-based. So unlike a residential mortgage where, one bank's fixed rate for 3 years is X, a commercial rate's going to be a wide range. Now, that range is determined based off something called a spread. Now, depending on the bank and depending on the product, this could be spread on the Canada mortgage bond, or it could be a spread on the bank's source of funds. So let's use the example of a CMHC MLI Select mortgage. Now, CMHC being funded, essentially a government funded organization, they have something called a CMB allocation. So essentially they buy a whole bunch of Canada mortgage bonds and they sell it off to approved lenders, and the lenders use that as a source of funds for, a multifamily mortgage. Now they apply a spread on that. So let's say you get a 5-year CMHC MLI Select mortgage. Your rate on your letter of intent from the lender is going to be the CMB for that term. So in this case, 5 years. So the 5-year CMB plus 75 dips. Now that'll change again based on loan size, based on location, based on experience, based on lender, and so on and so forth. But bottom line is, you're based off the CMB because that is the source of funds for that bank. In another case, you might be looking at a bank who's just lending on a regular retail property. Now, their source of funds are their own. They're not using a government insured product. So, each bank has a proprietary source of funds calculation because each bank, they invest in different things. They pull from different deposits. They have different investors. So their cost of funds would vary wildly. But what is common is that your pricing will be a spread on their cost of funds. So why did I want to highlight this? In a declining rate environment where the hot topic is a prime rate by the Bank of Canada, I've had a lot of investors kind of come to me to be like, oh, prime rate dropped. Prime rate dropped. Why is my commercial rates not going down? It's because we don't base commercial rates, generally speaking, off prime. It's really important for investors who are getting into the commercial space, whether that be 5+ apartment buildings, commercial, industrial, retail, etc., to understand how the bond market works and how, pricing works, how cost of funds works, and so on and so forth. That was just a very high level overview. Over the next few videos, we're going to be digging deep into what CMB allocation actually is, how industrial versus retail versus multifamily buildings are actually priced, and we're going to get really nerdy about how all these things are calculated. So that's it for now. We'll catch you on the next video.